Okay, here's a question for you. When a parent company, this supposed financial bedrock, turns around and sues its own subsidiaries, especially when those subsidiaries are crypto giants already tangled up in bankruptcy proceedings, what does that actually tell us? Welcome to the Deep Dive. We're the show where we take that big pile of sources. You've got the court filings, the news reports, the insider chatter, and we really dig in to unearth the insights, the stuff that maybe isn't immediately obvious. And today, wow, we are plunging headfirst into a really high-stakes, multi-billion-dollar legal drama. It's unfolding right at the heart of the crypto universe.
That's right. We're dissecting the recent court filings and news reports surrounding Digital Currency Group, or DCG as most people know it, and its subsidiaries, primarily Genesis Global Capital and Genesis Asia Pacific. It's a really complex story. You've got billions of dollars flying around, this seemingly simple promissory note at the center of it, and then the sort of devastating ripple effects from that big crypto market crash back in 2022. It's a story of, well, internal conflict, market chaos, and honestly, a pretty desperate fight for survival among these interconnected companies.
So our mission today, then, is to peel back the layers of this really intricate legal battle. We want to get a handle on not just what DCG is claiming against Genesis, but maybe why now? And how's Genesis fighting back? And crucially, how does this whole corporate family feud fit into the bigger picture, the often chaotic narrative of the crypto market itself? We've got the actual court documents, detailed news reports to guide us through this, so let's unpack it. Because this feels like more than just a simple financial dispute. It feels like, I don't know, a lesson in risk, governance, and survival in the crypto world. Okay, let's zoom right in on the immediate flashpoint here, that huge $1.1 billion promissory note. Sounds like, standard corporate finance stuff, maybe a bit dry. But its backstory is actually, well, it's a crucial piece of that whole crypto crash puzzle, isn't it? What exactly is this note, and why on earth did DCG issue a 10-year one to its own subsidiary? That seems like a long time.
Yeah, it does seem long. So, a promissory note, just to be clear, it's essentially a formal promise. One party says they'll pay a specific amount of money to another party, either by a certain date or, like in this case, over a period of time. Think of it like a corporate IOU, right? It's a legally binding debt acknowledgement. Here, DCG, the parent company, issued this note to Genesis, its big lending arm, back in June 2022. And that 10-year term you mentioned, that's really critical. It wasn't designed as quick cash, not a short-term loan Genesis could just liquidate immediately. Instead, it was structured as this long-term capital commitment. It spread DCG's financial obligation out over a whole decade. That really signifies DCG was trying to shore up Genesis's balance sheet for the long haul, taking on a pretty significant enduring liability to try and stabilize its subsidiary during, well, a moment of serious crisis.
Right. So DCG is acting like the safety net here, the lifeline for Genesis. But what was the crisis? What prompted such a big long-term commitment? I know it ties back to one of crypto's major implosions.
Exactly. This note was issued primarily as a safeguard. It was a direct response to the looming threat posed by the collapse of Three Arrows Capital, 3AC. Now, 3AC, as many listeners will remember, was a massive crypto hedge fund, and they had borrowed heavily, from lenders all across the crypto ecosystem, including Genesis. So when 3AC defaulted on its loans in June 2022, it just blew this massive hole in Genesis's balance sheet. It particularly hit the equity of Genesis Asia Pacific. And this wasn't just a small problem. 3AC's default created a multi-billion-dollar issue for the whole industry, and Genesis was right there in the firing line, heavily exposed. So the promissory note was DCG trying to, well, proactively plug that potential hole in Genesis's equity to absorb the shock from 3AC and maybe just as importantly, signal stability to Genesis's clients and the market. What's really fascinating and maybe easy to miss is just how interconnected all these entities were, how fast a problem at one firm could ripple through and create these huge vulnerabilities elsewhere. It forced a parent company to issue this multi-billion-dollar, decade-long IOU to its own subsidiary. It just shows you how fragile that whole interconnected leverage system was back then.
Okay, so on the surface, it looks like DCG is the responsible parent stepping in, absorbing this huge potential blow for its child company. But here's where it gets, well, really weird and counterintuitive. DCG is now claiming Genesis actually profited, handsomely even, from that exact situation. How does a safeguard suddenly become a massive windfall for the recipient? And why is DCG now demanding money back? That feels like a huge reversal.
It is a huge reversal. And that's precisely the core of DCG's current lawsuit. It's where their argument gets, well, pretty audacious, frankly. DCG alleges that Genesis Global Capital and Genesis Asia Pacific gained hundreds of millions of dollars. And this is the crucial part. They did so without suffering any loss from that 3AC default. This isn't just, a minor quibble over accounting. It's a fundamental challenge to the entire premise of their original financial support back in 2022. DCG issued that 10-year note to prevent an anticipated shortfall, right? They thought Genesis was going to take a massive hit. But now they're claiming Genesis ended up far, far better off than anyone expected. They essentially argue Genesis turned a potential disaster into a profit. This massive windfall, as DCG calls it, implies the original bailout became, in their view, an unjustified enrichment for Genesis. So the payments DCG made on that promissory note, they see those now as overpayments that should be returned. It completely flips the script on the typical corporate bailout narrative.
Wow, that is a bold claim. How? How did Genesis, supposedly staring down this massive loss from 3AC, manage to pivot and actually make money? What were the mechanics behind this alleged windfall?
Right. This is where the wild volatility of crypto assets comes into play, and maybe some clever management of collateral, too. The court filings explain that cryptocurrency prices eventually recovered after that initial crash in mid-2022. So remember, when 3AC defaulted, Genesis, as the lender, was holding various assets as collateral against those loans. Among those assets was a significant chunk of shares in Grayscale's Bitcoin Trust, GBTC. Now, for listeners who might not be familiar, GBTC is basically a trust that holds a lot of Bitcoin. It trades like a stock, letting traditional investors get exposure to Bitcoin's price swings without actually holding the Bitcoin themselves. It's a regulated security. So back when 3AC defaulted in June 2022, Bitcoin and the whole crypto market were way down. That means the GBTC collateral Genesis held would have been valued much lower at that specific moment. But over the following months and into the next year, the market started a pretty significant recovery. Bitcoin's price climbed steadily. As Bitcoin rose, the value of the assets inside the Grayscale Bitcoin Trust also went up, and that directly increased the value of those GBTC shares Genesis was holding as collateral from 3AC. This meant that when Genesis eventually liquidated that collateral, and that liquidation process takes time, it's not instant. They sold it at a much higher price than anyone anticipated back when the promissory note was first issued.
Ah, okay. So they held on to collateral that then appreciated significantly after the initial crisis point. They essentially rode the market recovery up with 3AC's collateral, turning a potential hole into a surplus. That's quite a turn of events. What are the actual numbers DCG is using to back this up, this profit claim?
Exactly. The filing specifically states that the incremental amounts realized by Genesis after issuance of the note were far more than sufficient to overcome the prior $1.1 billion collateral shortfall. And then it says, and on information and belief, allowed Genesis to profit from 3AC's default by recovering nearly $2.8 billion on the original $2.36 billions in 3AC loans.
Okay.
So that suggests, a positive difference of over $400 million, turning what looked like a catastrophic loss into a net gain, at least on that specific 3AC exposure. If you zoom out, it's a vivid illustration of just how volatile crypto is, how rapid market swings can completely change fortunes. A position looking like disaster one month could become profitable the next if you hold the right, appreciating collateral. DCG's whole argument hinges on this. The promissory note was a proactive measure based on a projected shortfall, but the actual outcome, driven by that market recovery, wiped out the shortfall and then some. So DCG argues since Genesis didn't actually suffer the loss and, in fact, profited, the payments DCG made on the note were essentially overpayments. They unjustly enriched Genesis, and now DCG wants that money back.
Right. So DCG's basically saying, look, we had your back when things looked grim, but you bounced back way better than expected, so give us back that overpayment. Yeah. What's Genesis saying about this? They can't be taking this lying down, especially given their own history with DCG.
Oh, absolutely not. Genesis, through their counsel, Luke Barefoot, from Cleary Gottlieb, a major law firm, came out swinging. Very strong rebuttal. Barefoot's official statement called DCG's lawsuit an unfounded, haphazard, and convenient about-face, and explicitly labeled it meritless. So this is much more than just disagreeing on the numbers. It's a fundamental challenge to DCG's entire legal basis here. They're accusing DCG of completely and opportunistically changing their story. Genesis's lawyers argue that DCG's new position flatly contradicts the written agreements between the two companies. What that means is Genesis isn't just saying DCG is wrong about the outcome, they're saying DCG is trying to rewrite the contract itself. They'd argue the promissory note was an unconditional agreement made in good faith during extreme uncertainty. The market recovery later. That was just good fortune. It doesn't invalidate the original necessary deal. And crucially, Genesis asserts DCG's claim goes against DCG's representations to the bankruptcy court. Now, that is a serious accusation. It implies DCG made specific statements or filed documents during Genesis's own bankruptcy proceedings that acknowledge the validity of this very promissory note. So now, trying to claw back funds based on a new interpretation, that could be seen as undermining the bankruptcy process itself. Courts really don't like that. And finally, they point out it contradicts the fact that DCG already handed over $100 a month plus in distributions, suggesting DCG had previously acted in ways that showed they accepted their obligations under the note. Essentially, Genesis is painting a picture of DCG rewriting history to suit its current financial situation, maybe due to its own pressures, and that this about-face is just legally and ethically wrong.
So it's not just you owe us money. But Genesis is hitting back, saying DCG is contradicting itself, contradicting prior agreements, even contradicting what they told the bankruptcy court. That's a really potent counter-narrative. It points to something deeper than just financials. What could have possibly changed for DCG to take such an aggressive and seemingly contradictory stance now?
Precisely. That contradiction is key. What fundamentally shifted? Why the about-face now? Genesis is suggesting DCG is trying to reinterpret history, perhaps because DCG itself is feeling financial pressure or has had a strategic shift. The point about contradicting representations to the bankruptcy court is particularly damaging for DCG if true. Courts demand consistency. If DCG previously affirmed the note's validity in that context, trying to undo it now looks like pure legal opportunism. This isn't just about a line item on a balance sheet anymore. It's become a fight over the sanctity of contracts, about legal consistency, about corporate integrity within a complex group. It suggests a major strategic shift inside DCG, maybe driven by a need to claw back capital wherever they can. And Genesis is determined to expose that shift as legally unsound and opportunistic. You just don't often see this kind of public intercompany litigation, especially with such strong accusations flying back and forth. It paints a really stark picture of a relationship that is completely broken down.
And you mentioned earlier, this is just the latest legal entanglement, which implies this isn't the first round in the ring for these two, right? It feels like a much bigger, nastier conflict, almost like a protracted family feud playing out very publicly.
Far from the first round, absolutely. This specific lawsuit from DCG over the promissory note, it's really just one battle in a much larger ongoing legal war. It paints a truly dramatic picture of a corporate family completely fractured. In fact, and this is crucial context, back in May of this year, Genesis actually initiated its own lawsuits against its parent company, DCG, and against several affiliates, and even against DCG's CEO, Barry Silbert, personally. So the subsidiary, Genesis, actually fired the first major legal salvo in this broader war against its own parent. Long before DCG filed this claim about the promissory note, the legal attacks are multi-directional, which is incredibly unusual and really signals a complete, total breakdown in trust and financial alignment between these supposed partners. It suggests the relationship hasn't just soured, it's become openly adversarial. Both sides seem to view the other as the main cause of their problem.
Wow, wait, Genesis sued DCG first and sued Silbert personally. That completely changes the dynamic, doesn't it? It makes you rethink who the initial aggressor or the primary aggrieved party might be here. What were the core allegations Genesis made? Why did they take such a drastic, almost unheard of step against their own corporate parent seeking such a huge amount of money?
It is a stunning twist, and yes, it absolutely reframes the narrative. Genesis went after DCG seeking a truly staggering sum, $3.3 billion, and the allegations were explosive: fraud, insider enrichment, and concealed transfers. We're way beyond a simple contract dispute here. Genesis is claiming DCG engaged in systematic financial manipulation that directly harmed Genesis. The fraud part could mean misrepresenting Genesis's financial health or the terms of deals between the companies. Insider enrichment suggests DCG, as the parent, put its own interests or its executives' interests first, allegedly by pulling assets out or taking loans it couldn't repay, especially as Genesis slid towards insolvency, basically extracting value from the subsidiary for the parent's benefit. And concealed transfers. That points to a deliberate lack of transparency, hiding these fund movements from creditors, maybe even from Genesis's own management at times. It paints a really grim picture of, well, betrayal within the corporate family, turning what should be a unified group into adversaries fighting over the remaining scraps. If you zoom out, it just highlights the immense dangers of, commingled funds and opaque deals between related companies, especially in a newer industry like crypto, where the rules are still being written. Genesis's lawyers are essentially arguing DCG didn't just fail to save Genesis, Genesis. They actively contributed to its financial distress. That makes this a genuine battle for accountability.
What stands out most to you in this unbelievably messy, bitter web of lawsuits? It really does feel like a corporate divorce playing out on a multi-billion-dollar stage with accusations flying everywhere.
Well, what's truly fascinating, I think, isn't just the sheer amount of money involved, but the fact that the suits are flying in both directions. It's not just one side claiming injury. It points to a complete breakdown over fundamental issues: control, responsibility, alleged wrongdoing, and who owes whom massive sums of money. This suggests the relationship collapsed entirely, forcing everything out into the public legal arena instead of being handled internally. When a subsidiary sues its parent for billions, alleging fraud, that tells you things went far beyond typical financial disagreements. It points to deep-seated conflict over management, over fiduciary duties, who's supposed to be looking out for whom and how capital was allocated within the whole DCG ecosystem. This isn't just about debt repayment. It feels like it's about perceived betrayal, alleged exploitation. One entity may be prioritizing its own survival over another's within the same group. It's a classic example of how severe financial stress can just rip corporate structures apart, leading to this kind of internal warfare, especially when the stakes are this high and the underlying assets are so incredibly volatile. And the outcome here, it won't just decide who gets paid what. It's going to set really important legal precedents for how these kinds of intercompany dealings work in crypto moving forward. It could influence how future crypto conglomerates structure themselves. It's a stark lesson that even strong corporate ties can break under extreme pressure.
Right, and none of this happened in a bubble, did it? These lawsuits, this internal warfare, it's all playing out against that incredibly chaotic backdrop of the big crypto market crash in 2022. That whole period felt like one shockwave after another.
Absolutely not in a vacuum. The 2022 crash, many experts trace its real start back to the spectacular collapse of the Terra ecosystem, Luna, and the UST stablecoin back in May 2022. That just created this devastating ripple effect. Terra's implosion wiped out tens of billions in market value almost overnight. It shattered investor confidence and triggered this crisis of liquidity and trust that just spread like wildfire through the whole crypto space. It really exposed how fragile these highly leveraged platforms were and just how deeply interconnected the ecosystem had become. That period saw so many bankruptcies: Celsius, Voyager Digital, and as we've discussed, 3 Hours Capital. They all faced severe distress or just collapsed entirely in the months after Terra. So this brutal market context is absolutely crucial for understanding why the DCG-Genesis relationship deteriorated so badly and why these disputes got so intense. It wasn't just isolated failures, it was a systemic shock. It exposed vulnerabilities everywhere, forced companies into desperate moves, led to the scramble for liquidity, and ultimately, these very public, very bitter legal fights. It was an industry-wide stress test, and frankly, very few passed unscathed.
Okay, so 3AC was a big hit, part of that initial wave after Terra. But the sources, and even DCG's own filing apparently, point to the FTX implosion later that year as the real tsunami, the thing that truly crippled Genesis. What was so uniquely devastating about FTX's collapse for Genesis, maybe even overshadowing the 3AC hit?
Yeah, DCG's own filing makes that distinction quite clearly. It almost seems like they're trying to shift the narrative slightly, emphasizing FTX as the unavoidable catastrophe that doomed Genesis anyway. They state that Genesis Global Capital's direct credit exposure to FTX itself was not material, meaning Genesis hadn't loaned huge amounts directly to FTX. But the filing describes the FTX bankruptcy as the equivalent of a tsunami in the crypto world, unleashing broad and lasting effects. So it raises that critical question: was 3AC just the initial tremor that required the promissory note bandage, or was FTX the true Force 10 hurricane that sunk the ship, regardless of whether the 3AC hole had been patched? The FTX implosion in November 2022 was just unprecedented, not just its size, but the nature of it. The revelations of alleged massive fraud, the commingling of customer funds, the complete lack of basic financial controls at what everyone thought was a leading, trustworthy exchange, that just vaporized trust across the entire industry. It led to this widespread panic and withdrawal of capital from almost all centralized crypto entities. It was fundamentally different from 3AC, which was just a hedge fund default. FTX's collapse felt like it undermined the very foundation of trust in the space.
So it wasn't about Genesis having bad loans to FTX, but rather the system-wide panic and the absolute shattering of trust that FTX caused. How did that play out specifically for Genesis? How did it lead to their downfall?
Exactly. The FTX collapse directly triggered what DCG's filing calls a run on the bank at Genesis in November 2022. And that's not just a figure of speech. It was a literal digital stampede for the exits. You have to remember, crypto lenders like Genesis operated a bit like traditional banks, but with crypto. They took in deposits, Bitcoin, Ethereum stablecoins, and then lent those assets out to institutions or traders to generate yield, promising returns back to their depositors. When FTX blew up and the details started coming out, panic just ripped through the crypto community. People were terrified their funds were trapped or gone forever, fearing contagion would spread, so they rushed to pull their crypto out of Genesis and other lenders all at once. But Genesis, like most lenders, didn't have all those assets just sitting there liquid. Much of it was lent out. This massive, sudden wave of withdrawal requests completely overwhelmed their available reserves. It created an acute liquidity crisis, and that's what forced them to halt all customer withdrawals on November 16, 2022. That action freezing withdrawals is a classic sign of insolvency. And it led directly to Genesis filing for Chapter 11 bankruptcy just a couple of months later, in January 2023. It became pretty clear that even if Genesis had somehow fully recovered from the 3AC hit, the sheer scale of the FTX-induced panic and that resulting bank run likely would have crippled them anyway. It exposed a fundamental weakness in that crypto lending model. And what's really fascinating, maybe even a bit ironic, is DCG's own admission about FTX's impact in their lawsuit. Their own complaint explicitly states, even had 3AC not defaulted in June 2022, Genesis Global Capital would not have had sufficient capital to withstand the unexpected and devastating market rout that followed the collapse of FTX in November 2022. Now think about that. That statement from DCG's own lawyers potentially and powerfully undermines their other argument, the one that Genesis somehow benefited from the 3AC situation to the point of a windfall that should be returned. If DCG themselves admit Genesis was fundamentally doomed by the FTX tsunami anyway, regardless of 3AC, it strongly suggests Genesis's ultimate bankruptcy was driven by that massive market contagion, not by some gain from 3AC collateral. It really complicates DCG's narrative for trying to claw back funds related to the 3AC note. It implies Genesis was heading for disaster anyway because of market forces totally beyond the 3AC situation. Genesis's lawyers will absolutely hammer that point.
And Genesis wasn't the only casualty swept away by that FTX tsunami, were they? It sounds like FTX's collapse was just this pivotal, catastrophic moment for pretty much everyone in the crypto lending and exchange world at that time.
Oh, absolutely not alone. It was a devastating period of systemic failure. The sources specifically mention another major crypto lender, BlockFi. They also filed for Chapter 11 bankruptcy in the exact same month as FTX's collapse, November 2022. That timing just vividly illustrates how widespread and systemic the crisis was. BlockFi, like Genesis, was a huge player in crypto lending, offering those high-yield accounts. And they also had significant exposure both to 3AC earlier and then to the broader market meltdown turbocharged by FTX. Their bankruptcy, right alongside FTX's, just underscored how interconnected and, frankly, how fragile the whole system had become. If you zoom out again, it shows how quickly these things can cascade. An initial failure like 3AC weakens the system, then a major pillar like FTX crumbles, and it triggers a full-blown systemic crisis. It really highlighted the lack of robust risk management, the lack of transparent accounting, and the lack of effective regulatory oversight in large parts of the crypto industry back then. That led to huge investor losses and these corporate collapses, setting the stage for the long, drawn-out legal battles we're still seeing play out today.
Okay, so after all that turmoil, the bankruptcies, the market chaos, the lawsuits starting, where does Genesis actually stand now? Have they managed to claw their way back at all, or are they still stuck deep in litigation and financial distress?
Well, despite those immense challenges filing for bankruptcy, fighting these ongoing legal battles, Genesis has actually made some really significant progress. They managed to emerge from that darkest period. They successfully completed their Chapter 11 restructuring plan in August 2024. Now, that was a monumental task. It involved incredibly complex negotiations with all sorts of different creditors, a big effort to liquidate assets at the right times, strategically recover funds where possible, and the result of all that effort. They managed to disperse approximately $4 billion in funds back to affected parties and creditors. That achievement, honestly, it highlights that there is a path to recovery, even for major players who get caught in these crypto downturns. It shows that even through the formal, often difficult bankruptcy process, a substantial amount of value can sometimes be preserved and returned to those who lost out. It really speaks to the underlying value some of their assets must have retained or regained and the ability of the legal system to handle these complex digital asset cases.
$4 billion dispersed back to creditors is definitely substantial. What does that tell us, maybe, about their ability to navigate those incredibly rough waters. And what does it mean for how crypto restructurings might work in the future? This is still pretty new territory for the traditional legal system.
It really does speak volumes about the resilience, or at least the sophisticated legal and financial maneuvering required to pull a large crypto firm out of such a deep hole. Successfully restructuring and paying out $4 billion is a testament to the hard work of Genesis management, their legal teams, and, as you say, maybe the underlying value of some assets, especially those that appreciated after the initial collapse. And importantly, it means real funds got back to a wide range of creditors. That's a definitively positive outcome for many people and institutions impacted by the 3AC and FTX failures. For the wider crypto industry, well, it sets a pretty important precedent. It shows how these large-scale bankruptcies involving digital assets can potentially be managed. It demonstrates that even with this new volatile asset class, the established legal frameworks for insolvency can be adapted. They can work eventually to facilitate significant recovery for stakeholders. It sort of signals that despite crypto's unique challenges, the traditional legal system is figuring out how to handle these complex, often global cases. That offers, maybe, a glimmer of hope and a potential blueprint for creditors and companies facing similar situations down the road. The fact Genesis emerged with such a large payout shows that not all capital was necessarily vaporized, even in the worst conditions. That's an important lesson.
Okay, so Genesis gets through bankruptcy, pays out billions, seems like they're maybe on more stable ground. And yet, DCG is still back in court, asking for more money from its former subsidiary. It really feels like these legal fights, much like the crypto market itself, just never truly end.
Exactly. It seems counterintuitive, right? Genesis navigates this incredibly complex bankruptcy, satisfies billions in claims to its creditors. Yet DCG pushes forward with its own claim, arguing it remains a creditor for this specific amount related to the promissory note. Their current complaint is asking the court to order Genesis to pay them more than $105 million, plus interest. That's the specific ask in this lawsuit. And it ties directly back to their core argument that Genesis got that windfall from the 3AC collateral recovery, making DCG's prior payments on the note overpayments. It just demonstrates that even when a company successfully restructures, even when it pays out billions, that intricate web of intercompany debts and historical agreements, it can keep fueling legal disputes long after. It really highlights the enduring complexity of corporate finance, especially in crypto, where asset values swing so wildly, potentially changing the perceived fairness of past deals in retrospect. It's a reminder that a bankruptcy discharge doesn't always wipe every single slate clean, especially when it involves a parent company with a long, tangled history of transactions.
This whole saga, honestly, it feels like a perfect microcosm of the wild, unpredictable roller coaster the crypto market has been on these past few years. But why should our listeners really care about these super complex legal fights between crypto giants like DCG and Genesis? What's the fundamental takeaway for them, beyond the headline numbers and the legal jargon?
That really is the key question, isn't it? Why does this matter to you, the listener? Well, digging into these disputes actually gives you crucial insights into several really critical aspects of the whole digital asset world, things that go way beyond just DCG and Genesis. First, it shines a massive spotlight on corporate governance in crypto. These cases just starkly expose how challenging it is to manage complex financial structures, subsidiaries, and internal dealings in a market that's evolving so fast and often lacks clear regulatory guardrails. You see this inherent tension. The parent company acting as both savior with the note and, as Genesis alleges, potentially exploiter with the alleged fund transfers. The deeper insight here is how internal agreements, meant for stability, can suddenly become weapons in a public legal war. It reveals this fundamental breakdown that goes way beyond a typical business disagreement. It forces you to think about how these intercompany relationships should be structured and governed, especially in such a volatile space. Second, it's a real-world, high-stakes masterclass in risk management. We saw DCG try to mitigate risk with that long-term promissory note for 3AC losses. But then we see how that very mitigation tool becomes a point of intense conflict later on, especially when unforeseen events like FTX completely rewrite the risk landscape. The real aha moment isn't just that big players can fail, it's understanding how the speed of that failure in crypto, combined with the lack of traditional safety nets like deposit insurance or unified regulation, can turn one default into a flash flood. The insight is seeing how quickly trust evaporates and cascades, making even seemingly robust internal safeguards vulnerable to overwhelming external shocks. Third, these cases just hammer home the interconnectedness of the crypto ecosystem. It's undeniable. 3AC's collapse punched a hole, then FTX's implosion, driven by alleged fraud, detonated confidence and triggered that tsunami that swamped Genesis, even though Genesis didn't have huge direct loans to FTX. This powerful domino effect proves no major player in crypto operates in isolation. Problems in one corner spread incredibly fast, creating systemic crises and triggering these chain reactions of legal battles that affect countless investors and other businesses. You absolutely have to understand these network effects and the inherent fragility that comes with them. And finally, maybe most importantly for the future, these disputes are actively shaping the evolution of crypto law. Right now, these cases are setting crucial precedents. How does a traditional court value a promissory note tied to volatile crypto collateral that shot up in value after the crisis hit? How do they untangle complex intercompany loans and alleged fraudulent transfers within a crypto conglomerate where assets move across borders and blockchains constantly? These are genuinely near and difficult questions for the legal system. And the outcomes of these high-profile battles, they will absolutely influence future regulations, future corporate structures, and best practices in the digital asset industry. It's law being made in real time, and understanding it gives you crucial insight into where the industry might be heading.
Okay, so let's quickly recap this incredible journey we've taken into crypto's corporate battlegrounds. We dug into DCG suing its own subsidiary, Genesis, over that $1.1 billion promissory note tied to the 3AC collapse. DCG claims Genesis ended up profiting by hundreds of millions without suffering the expected loss. Then we saw Genesis firing back, calling the lawsuit totally meritless, pointing to the original agreements, DCG's own statements in court, and critically Genesis's own prior $3.3 billion lawsuit against DCG alleging fraud, insider enrichment, and hidden transfers.
And we connected this whole intense drama back to the devastating 2022 crypto crash. We saw how the FTX implosion acted as that tsunami, which really crippled Genesis, triggering a bank run that likely would have happened regardless of the 3AC situation. Despite all that chaos, Genesis managed to successfully restructure and pay out billions to its creditors. Yet DCG is still pursuing its claim for over $105 million plus interest, a final lingering echo, perhaps, of corporate relationship completely shattered by market forces and deep internal discord.
Wow. This deep dive really makes you grapple with the true nature of risk, responsibility, and reward in the crypto space, doesn't it? It feels like this constant, sometimes brutal balancing act between pushing innovation forward and managing inherent instability.
It really does. And given that DCG themselves acknowledged Genesis likely would have been overwhelmed by FTX anyway, regardless of 3AC, it leaves you with this lingering question. In an ecosystem built on this web of interconnected trust, but underpinned by incredibly volatile assets, where does responsibility truly lie when the music suddenly stops? Who ultimately has to bear the cost when a black swan event like FTX hits? And maybe more forward-looking, how might all of this shape future corporate structures in crypto? Will we see more transparent, more legally robust arrangements between parent companies and subsidiaries precisely to prevent these kinds of complex, multi-layered disputes down the line? Could clearer boundaries and stricter governance maybe prevent similar family feuds within the next generation of crypto giants?
Definitely something to ponder as you continue navigating the fascinating and, often tumultuous world of digital assets. Hey, if you found this deep dive valuable, if we helped you understand this complex situation a bit better, consider subscribing to our channel, maybe leave a comment, engage with the content. It genuinely helps us out a lot, boosts our visibility in the algorithms, and frankly, it lets us keep creating quality crypto content like this deep dive for you. Thanks so much for joining us for this deep dive. We hope you feel a little more well-informed and maybe just a little more intrigued by all the layers hidden beneath those crypto headlines.